which is the decarbonation in the shipping business, future fuel options and their implications for the storage sector. Now, the next is going to be talked about by Mark Waddington, Director and Senior Consultant at Channoil. He's a senior downstream energy consultant with 30 years of commercial experience covering refining, trading, supply and commercial sales, including 21 years at BP and 6 years at World Fuel Services. A lot of BP guys here, ex-BP. Since 2017, Mark has been working for Channoil, and in 2018 became an associate director focused on trading, commercial and wholesale markets in EMEA, which is Europe, Middle East and Africa. He has produced market studies and investment analysis of bunker fuel terminals in Nigeria, Malta and Egypt. He's led a market study of the East African LPG market for potential investments in Mombasa, produced a UK market entry study for a European renewable fuel producer, and in June 2019, he was the opening speaker at an international bunker conference in Gibraltar, Global Fuel Supply, the far-reaching impact of the IMO 2020 sulfur cap. So, Mark, can you hear me?
I can. Can you hear me?
Yes, I can. So the floor is yours, sir.
Thank you very much. And thank you very much for the introduction. It's a pleasure to be here. Thank you to StocExpo and Tank Storage Magazine for allowing me the opportunity. I'm going to speak to you today about global bunker fuel supply in the current and future environment, and we'll talk about the implications that has for the storage sector. Just a quick intro to Channoil Energy to start with. You may have heard of us before as Channoil Consulting, and we've rebranded very recently. We are a specialist commercial advisory service and have been at the forefront of commercial oil and gas advisory services for over 20 years. The company was founded in 1998 by the previous owner of Channoil Broking. As a company, we cover Europe, Middle East and Africa, as well as starting to break into some Central and South American business. We're basically a commercial advisory service. We consult for companies, countries, governments, and other institutions, particularly around supply, trading, strategy, the pricing, and then economic investment evaluation across the refinery barrel, including storage operations. We also have an emerging renewables practice called Net Zero Solution, which can be found via the Channoil Energy website. That group is already active through this practice on biofuels, renewable fuels, and work on energy transition pathways. We have a core team that are all established industry professionals with commercial experience, and we're supported by a team of 40 to 50 associates who all have their own specific sector and market skills. Okay, so less about us and more about the matter in hand. I'm going to talk about bunker supply in transition, and a transition that has already started. It started last year with IMO 2020. It's been quite a couple of years. We've gone from concerns for the maritime sector about new fuels relating to the IMO 2020 implementation, launched straight into, I'm sorry to remind you, into a global pandemic. We are emerging from that slowly, but I'd say we were struggling to emerge from it. And the next agenda on the horizon for the maritime sector is the shift to net zero and the energy transition. So I'm planning to talk briefly about what happened to supply of IMO 2020 compliant fuel. Have a quick look at the COVID impacts and what that means for bunker fuel supply today, before taking a look at the IMO 2050 agenda, what it implies, the alternative fuel options such as they are today, and what this all implies for tank storage. Now, this is essentially a presentation about future fuels in the maritime sector, but what I'm hoping to bring out is the opportunities and challenges that this presents to the tank storage sector and operators. So firstly, IMO 2020, well, what actually happened? Well, the expected tightness, particularly of very low sulfur fuel oil, failed to materialize. There were widespread predictions, including from ourselves at Channoil Energy, that supply of very low sulfur fuel oil, VLSFO, would be tight, and that ship owners would have to substitute with marine gas oil. We ourselves published several articles looking at the price scenarios, examining fuel costs in terms of energy content, and discussing the likely supply implications. And in the end, the shortage failed to materialize. So the question is why? Well, for three reasons. Firstly, the refiners exceeded expectations by some way on VLSFO production, despite global limitations on low sulfur crude oil availability. The refiners did what they do best and managed to identify creative uses for the feedstocks and side streams that exist in the refinery system, and to make these new VLSFO blends. The second thing that happened was that traders built up stocks in anticipation of shortages, and this helped support demand in the first quarter. In a sense, this part of easing the supply issues was almost a self-fulfilling prophecy. There was widespread concern about the forthcoming changes and the potential shortages that they would lead to, which drove the forward prices for early 2020 to a relatively high level. So the traders took advantage of that to help finance the stock build, which helped to ease the pressure in the first quarter. And then finally, there was the impact of COVID-19. Now, just to help understand, how that has played into the bunker market, the pandemic led to a major collapse in demand for most transportation fuels, but especially jet fuel, gasoline, and diesel. And these are fuels that would otherwise be made in the refinery system from feedstocks, by upgrading those feedstocks that could otherwise be used to make VLSFO. So in simple terms, the demand for those high value transport fuels collapsed temporarily. So did within the refinery the internal competition for the VLSFO feedstocks. So the problem to a certain extent went away. At the same time, high sulfur fuel oil remained relatively robust, in other words, tight supply-wise, thanks to run cuts that were going on as some of the smaller, less sophisticated refineries cut back their production as they were faced with the collapse in transport fuel demand. Those kind of refineries are quite often the typical high sulfur fuel oil suppliers. And in fact, since then, many of the smaller or simple refineries have announced closure or some kind of conversion to biorefining. Okay, so where are we today? Supply is adequate thanks to subdued global demand. The economic recovery is strongest in Asia, which is coming out of the pandemic quickest, and that is shaping today's price behavior and trade flows. Europe and North America are emerging more slowly, and demand remains well below historic levels. And so there continues to be this lack of competition in the refining system for the VLSFO, and that means that availability is good. This ready availability of VLSFO has worsened the economics for scrubbers, and we expect that to continue for a while to come. But the world with an additional grade of bunker fuel, at least one additional grade, is here to stay. So now moving on to the IMO 2050 agenda. This is the next stage in the IMO's cleaning up of the shipping sector and is in line with the global decarbonisation agenda. It's a big step, much bigger than shifting to 0.5% sulfur fuel. Target is to reduce greenhouse gas emissions from the global shipping fleet by 50% by 2050. And to achieve a 70% reduction in carbon intensity of shipping. That's the carbon dioxide emissions per shipment in the same time frame. So that's basically saying that CO2 emissions per shipment need to fall further than 50%, which will be delivered in part by greater operating efficiency. The ship owners are using measures of energy efficiency, EEXI and EEDI, various means of calibrating and assessing a vessel's performance against set standards by class of vessel. But the combination of those two targets, the 50% and the 70%, it's allowing for the fact that global shipping trade is still expected to grow. But it's fair to say that not only will ship owners have to start measuring their carbon numbers and working out how to get them down, but efficiency measures alone are not going to do it. Low carbon fuels will be needed. Okay, so then Europe. Now, Europe is interesting, and as Peter Zonneveld has already said, the emissions trading scheme is moving ahead and has ambitious goals, and in fact is targeting already a 55% reduction in greenhouse gas emissions by 2030. Compare that to the IMO talking about 50% emissions in the maritime sector by 2050. So it's a far more aggressive target. They've also announced that they intend to include the maritime sector in the emissions trading scheme from next year. Whilst it's a trading scheme for the ship operators who are still burning high carbon fuel, this will essentially be some kind of CO2 tax on shipping in EU waters. Now, how they are going to implement this is not yet fully clear. However, they signaled it's pretty likely that they will target regulating any journey with an EU destination. So it's not just a question of when shipping is sailing in EU waters. It's probably going to lead to some regulatory arbitrage, or people are going to try to avoid these levies. But what is certain is that there is some tension here between the EU's targets, which are far more aggressive than the IMO's. And what will certainly be interesting as we have a new political regime in the US is to see whether there is some kind of alliance that develops between the EU and the US on some of these issues. Anyway, so what are the alternative fuel options? I mean, future fuels is a fascinating subject, but it's full of possibilities that are many possibilities that are, one, they're competing with one another, two, they're not yet commercially ready or scalable or commercialized, or if they are, the pricing isn't going to look that great right now for the maritime sector. So we'll look at the economics a little bit later on in this presentation. LNG, it's still a fossil fuel, but being a gas, it's less carbon intensive than the fuel oils typically used by the ship owners, and there's a supply infrastructure that's growing here. Biofuels, and I should include in here renewable fuels such as HVO, are a potential drop-in replacement, as Peter Zonneveld has already discussed. But biofuels fame in particular is problematic in wet systems because of various chemical properties. And these fuels do right now, if they are not subsidized or incentivized in some way, look expensive when directly compared against their diesel and fuel oil alternatives. LPG is already in use as a fuel for LPG carriers, but right now bunkering infrastructure is quite limited. Now, getting on to some of the more innovative, the newer fuels that are under discussion, methanol. Again, methanol carriers already use this as a fuel. It is on the face of it as a fuel, a cleaner option than the current bunker fuels. But green methanol, it's an energy-intensive production process, and it's made from fossil fuel and from natural gas. and there does not yet exist at scale any green methanol production. Similarly with ammonia and hydrogen. Hydrogen is produced today mainly in the petrochemical sector, but again in a carbon intensive way. Ammonia is a widely used agrochemical and is already commonly handled in global trade. So both look like viable options, and ammonia is a more convenient carrier of hydrogen as an energy source than hydrogen itself is, because it can be stored at doesn't need to be stored at such low temperatures and high pressures as hydrogen, and it's technically cheaper to produce as well. But it is evil stuff to handle, and I'm sure that any operator who deals with ammonia probably has a separate health and safety handbook for this subject alone. Last but not least, electric. It's probably only going to be feasible for local shipments and not for global supply routes. Okay. So there's a range of alternative fuel options. Now, the question this was then raising for us is, well, how do these look now, and what looks feasible and possible? This work, I should point out, has been developed by Channoil Energy in cooperation with Gibson's shipbrokers, who've helped us with some of the vessel data. There's a lot on this slide. What we've done here is to take the current main bunker fuels and compare them against LNG and biofuels as let's say the short-term realistic available future fuel options. And we've looked at them using a reasonably current price environment. In fact, this is based on prices from the end of the week before last, 5th of March 2021. And our price sources were courtesy of Argus Media and Prima Markets, a biofuels publication. So we've then looked at the expected fuel consumption rates for each fuel for a typical VLCC. The consumption in tons per day varies by fuel type, and this is an important element of the calculation because we're comparing fuels based on their calorific content in millions of BTUs per ton, rather than a pure ton for ton comparison, which we think is important for testing the true economics. We've then calculated the benefit over VLSFO, assuming that that's the current default for the alternative fuels. And we've also modeled a couple of scenarios with a carbon price element. Now, we've taken two here, and I'll explain those as we go through. But the carbon price element is seen in this calculation as a charge against the more carbon intensive fuels, and benefits the LNG and the biofuels economics. It is the expectation of Gibson's and Channoil Energy that if a ship owner is going to justify investing a vessel of this size in dual fuel capability, that they will probably need the LNG to remunerate around at about $6,000 a day benefit to justify it. So as you can probably see from these numbers, looking at on here the 10,700 and the 12,700, which is under the current level of EU ETS carbon levy, it's already looking like it would make sense for ship owners to make that investment. Now, this does vary, and it's particularly varied recently as parts of the Northern Hemisphere, particularly around Asia, have gone through a much colder winter than average, which has driven the LNG prices up and had squeezed these economics. But things have normalized a little bit again, and it's certainly looking very attractive. The biofuels options do not look attractive, which might lead to some healthy debate on the panel later on. But I would comment that these fuels are expensive when compared directly against their diesel alternative, and usually make the most sense when the governments demand it or when the client demands it. And I think we're going to see no shortage of that over the future years. And it's certainly leading some companies. I know that Maersk and Total are both looking at options around biofuels for their bunkering operations. Now, the right-hand scenario with a carbon levy of 250 euros per tonne it's showing us in this chart is in there based on a paper that Traffic Europe published a couple of months ago, proposing that this is the kind of levy that will be needed to drive change in the maritime sector. And you can kind of see what they mean, because what happens when you put that kind of levy into the economics is all the fuel options make more sense than VLSFO, and it drives you towards a range of low carbon options, including the drop-in ones such as biodiesel and HVO. So, what is all of this telling us? Well, basically, we expect LNG uptake to grow in the near term. In the very short term, there's plenty of supply of all of the traditional bunker grades post IMO 2020, and at least until demand fully recovers on the other transport fuels. After that, VLSFO availability will tighten a bit, but those three fuels are here to stay. Bunker demand is going to continue to grow with world trade growth, but it's going to be balanced increasingly by increases in vessel efficiency as the ship owners get to grips with the challenges of the IMO agenda. One thing that is coming out quite clearly from all of this, whether we're talking about FAME or HVO or LNG, is there are going to be more grades of bunker fuel in the future, going into, broadly speaking, the same amount of vessels and operation and voyages. We think the ship owners are going to be ordering more dual fuel tonnage. It's already looking like the economics make sense for that. And we've seen recently, I think Shell made an announcement only last week, and in Petrodec have announced that they are doubling their dual fuel LPG carrier capacity. So we expect that kind of growth to continue, possibly to accelerate, as it looks economically attractive. And it's apart from the biofuels, the main viable decarbonisation option of any sort today. The biofuels are the more high-cost niche option. They are drop-in, and they will be attractive because of that. Now, the other thing is, ideally, the transition options need to last as long as the ship, which is one of the reasons I think that the IMO is taking such a lengthy pathway, because they know the ship owner's typical investment cycle. And the trouble, as we're seeing and hearing it, is that the green ammonias, hydrogens, and methanols of this world are not expected to be significantly available or economic for another 10 to 15 years. But one move that LNG fueling or dual fueling investments will be looking towards is the opportunity to retrofit to other gas fuels such as ammonia or hydrogen. So finally, we see a longer term low carbon future for the sector, but only once the alternative fuel options become commercially viable, with the gas based ones very much at the fore. So for the storage sector, what do we conclude? More grades means more complex storage requirements. More grades means reduced unit throughput for each grade. What should the storage sector do? Maximize flexibility, look to offer as full a range of grades as possible, prepare for the short-term lower carbon options, and the market. There's a market being created for these grades, and be aware of the medium-term carbon options that may emerge. Thank you very much for your time and interest. Over to you, Mike.
Thank you, Mark. That was very comprehensive. Like you say, there's a lot of question marks still out there at the moment, and we do have a panel session coming up in 5 minutes. But before that, we got a couple of questions that for you that we can give you now. One of the ones I thought was quite interesting was Stacey Van Fleet. How quickly do you expect to see changes in the bunker fuel buying requirements? Now, I know from my own experience that it's very little out there at the moment, other than the VLSFO and LNG.
Exactly. It's difficult. I mean, it's all driven by, you can't for those of us who own a car, you can't put a different fuel in your car without doing something to the car first, and the same is true many times over for the chips. I mean, switching from one grade of liquid fuel from a marine gas oil to a fuel oil is one consideration, but I mean, the ship owners who are looking at dual fuel investment are taking some kind of leap of faith. But more are doing it, and more are doing it kind of in step with the supply infrastructure being developed. There's LNG supply infrastructure originally started coming in place more for sort of, I'll call them shuttle type operations. So like ferry services. So parochially, I could think about something like Dover Calais. But increasingly that supply infrastructure is being built for vessels that operate more global trade. And that's encouraging then the ship owners to make the investment. And then that will then put them in a place where they are ready with less investment to modify to accept a future fuel that is a gas-based fuel like an ammonia or something like that. But the real struggle is how long it's going to take to get to commercialized and at sensible commercial prices for the ship owner for these future fuels. I mean, we can all be for it. We are all for it, but it's going to take time for it to materialize. And 10 to 15 years is a number I've heard recently on green ammonia and green hydrogen from an engineering firm that we have dealings with, who's working in this sector and with some of the developments that are going on and building that infrastructure.
Yeah, I agree, and I think part of it is going to be, like you say, it's definitely, these new fuels are definitely going to need some sort of subsidization by somebody, and of course how quickly that comes in, as well as the regulations, when no vessels are required to have it right anyway. Charles Papp has asked, should regulatory bodies increase pressure on industries to speed up the viability of green fuels?
Well, I don't own any ships, so it's probably easy for me to say yes. But this is the challenge with the global sector. The challenge, so the reason it's hard to impose tough carbon reduction requirements on the aviation sector, which is, if I may use that negative adjective, a notorious emitter of CO2 at high altitude, is because it's global trade and it's very easy for someone to just refuel somewhere else. So yes, but it requires global action. But I referred briefly in my presentation to the possibility that with the EU pushing this agenda quite hard, and with a Biden regime in the US, that could at least force some kind of progress on this from some of the advanced economies. But we'll see.